Okay, good morning, traders, and welcome to this live intraday strategy webinar. Today is Thursday, August 12th. Mike Boutros with you on the horn. Welcome, guys. Jay, Kay, Ted, everyone in the room. It's been a lackluster trade session for the last couple of days on some crosses for the majors, and some of the others have just seen some really decent moves, right? So Swissy is actually the worst performer versus the dollar this week. I was just taking a look at the broader performance. That made a nice rip. So we'll take a look at all those levels. This is our third webinar for the week, guys. We got 2 free sessions this week with daily effects, but we're back on with full allotted schedule next week. So most of this you've seen this week, but let's get into where we are right now into the close. We did get some UK data earlier today on GDP coming more in line with expectations, maybe a slight tad stronger. But on the menu, we'll hit DXY, Euro, Aussie, crude. We'll keep an eye on the 10-year. It's actually been really clean. Kiwi dollar, Bitcoin, can't leave that. Dollar CAD, dollar Swiss, dollar yen, gold, and silver. Any other questions or trade setups you want to review? As always, feel free to throw them on the message board at any time. Ted, Jay, good morning to both of you guys. All right, so let's jump right in. Resistance at 93. Right? It's been the high we closed for the year. That's what we've been focused on, and that's what needs to materially break tomorrow on the close to validate the resumption higher. All things held constant, we simply ran into the July highs and faltered. If the weekly close materializes again below 93, it's the same exact trade we did here, guys. It's the same exact thing we did in mid-July. If we falter here, you know, it's the range comes back into focus, the pullback scenario, the pullback threat comes into focus, but it's all about whether we buckle 93 or not on a weekly close. We've been saying that essentially since that March run. So here's what it looks like on the daily chart. Again, really nice stretch. We've been talking about that rally the whole time. Cleaned up the levels a little bit. So obviously here's last month's high, exactly capping the advance. Here's key resistance just higher. The high day close for the year, excuse me, the high day close from March, which was the high day close for the year, and the November high day close from last year. Okay. Now, yesterday, we posted an outside daily reversal off the highs. Typically, an exhaustion print. Would have loved for that to happen right here, nestled into this nice zone with the upper parallel, but we didn't get it. Certainly casts a shadow, a threat for the immediate advance on the dollar. And this has kind of been the threat that we've been talking about. So since the start of the week, we've been saying, look for possible dollar exhaustion, right? Happened a little bit later than we wanted to, but here are the levels that we crawled through. Boom, broke downtrend resistance, uptrend resistance holds, uptrend resistance holds, uptrend resistance holds. Here's the CPI print, right? So a lot of people, when we were talking about this in the webinar yesterday, oh, well, does the CPI print change the broader directional trade for the dollar? Again, these are catalysts. Right? We were looking for the exhaustion before the print. These are just catalysts for the moves that we're looking. So here's the pullback. We haven't even tested weekly open support yet. Nothing's necessarily marked reversal yet, but certainly that is a threat with that outside day reversal candle we made yesterday. So look, I'm kind of a little bit more in a cautionary tale here for the DXY. A 618 kind of gives you, fix that up. Possibility for a push towards 93 again, which is the same level we're talking about on the weekly chart. So for me, looking for, even if we do pull higher today, don't want anything above the 93 handle, essentially, possible exhaustion for that last draw lower. 92.77 is the high day close, remember, and then just lower is 92.65. That would just be a basic 38.2, nothing fancy, right? 2-week, 3-week rally, 38.2 pullback, call it a day. So I'm still thinking the threat for a deeper cut here in the DXY. It's all within the broader uptrend, guys. So it's nothing to necessarily, write home about or get worried about a larger reversal. But for the meantime, I do think the threat is for 92.65. If we get below this zone, that's a different ballgame. Now you've broken uptrend support. At that point, you start to risk this, a much deeper setback towards 92.30s. But all things held constant, that's sort of what I'm focused on into the close of the week. Any questions here on DXY? It's actually pretty clean. here's what it looked like last night. So no change to any of the levels. The only thing is just the stretch. So since we've made that near-term rebound there, the 618 kind of lines right up with that 93 handle. So I'm liking it. All right, next, let's just segue real quick to Euro, which I haven't updated since back here on the 8th. Look, it's the same trade. The breakdown looks like it's got more to go, but we're getting a little tired down here. And that's been the focus of the entire trade all week. Same thing, exhaustion on the long side for the dollar, exhaustion on the downside for the euro. So we made it through the 2021 low day close. We turned just ahead, again, of that key support zone. That's 38.2 retracement, the March low. So a little bit different of a picture here, whereas DXY caught that high from July. Euro has broken that low from July. What does that mean? Does that tell us anything? Well, oftentimes you'll hear me say these non-confirmation high in related assets. And what that is basically is you take two corollary assets that are working together and they're moving in the same directional trend. Doesn't have to be the same direction, but they're holding trend, meaning euro down, DXY up, right? I mean, obviously it's the inverse of this. So DXY broke the July high. DXY held the July high. Euro broke the July low. So that non-confirmation high, non-confirmation extreme on related assets oftentimes materializes, guys, at near-term turns in price. So further adding the threat for a larger rebound here. Again, let me take you back to the weekly charts. A little out of order here, sorry about that. Here's euro on the daily, on the weekly. So the level we were looking for, 1794. Again, the low we registered thus far was 1705, 10 pips off the low. But there's the low again from April. It's the objective opening range low for the year. Objective 38.2 from last year's low. Downtrend support, that slope. So again, lateral support, what do you do? Here's the daily chart. Outside reversal off the lows. Wait a minute, we just talked about an outside day reversal off the highs in DXY. Same threat materializes. Same threat materializes. So just very interesting to see how this is going to sort of pan out, break out from here. It's been not, it's been not a very fun trade to look at recently, just because of a lot of these trades for the week have come back. So Aussie, Kiwi, the breakouts that you made have kind of settled. Again, even on the weekly chart for the euro, your range is contracting. You only have a 0.2, not even 0.18 range so far for the week on the move. So it's not very encouraging, but downtrend support, lateral support, the yearly lows, 38.2, again, gives us the risk for some recovery here. Not to mention the ongoing momentum divergence we've been talking about. So interested to see how euro pans out. Again, my humble opinion, I'm looking for that rebound. Still for the initial weekly open, we haven't even tested that yet. Comes in really well with the low we close, 1760, 1790 is the objective weekly high. So the levels are pretty clean. The only thing we have to do to update this chart from that last one is, this is the same slope, is just the weekly range highs, okay, which come in just above that low we close. So that's your near-term breakout level. Breach above this would suggest a near-term low is in play. This is still key support. And we'll see how this takes into the end of the week. It's a very similar scenario to the DXY. Questions on euro? Now, heading into the close of the week, the only thing that we have worth of note really is the Michigan consumer sentiment. This is a preliminary read for August. We're going to be getting that tomorrow. Not expected to do anything major. Heading into next week, you start to get some interesting GDP figures out of the Eurozone. You get retail sales out of the US. You got the RBNZ. So we do have some catalysts, hopefully to stoke some play here. But the majors, for the most part, have kind of been not so exciting. Next up is Aussie. And here's what Aussie looked like last night. So that key support zone we talked about, I'll take you back to the weekly. It's been all about this major 73.29 zone. I talked about it in the webinar yesterday, talked about it on Monday. But it's really the whole game plan. The whole kit and caboodle is all based on this major pivot level in price. You can see the last 4 weeks just grinding into it. We've gotten some decent vaults. Intra-week, that level has offered some decent rallies. Every rally, though, just falls on its face. So that's the weekly chart. Nothing's changed there. Here's the daily chart. Downtrend support. There's that 73.28 level. Here's the monthly open at 73.28. Here's the monthly opening range lows just below 73.28. And just a very tidy opening range for the month is taking shape right above support. So look, you got a pretty decent vault again here. Here was the first one, right? Decent rallies, you know, they just don't last. They just don't last. So I'm thinking you're still going to get more of a contraction sideways move here. Here's what it looks like on the intraday chart. Ideal scenario was for a stretch into 74. That's what I was telling you guys earlier in the week when we were kind of like marking that really strong sort of move here into the divergence. Just one lower low below 30, the higher low above 30 tends to be a decent signal. Couldn't make it back up into 74. Couldn't make it back up into 74. So at this point, I'm looking at this. The 618 of the weekly range converges near slope. Well, not really too much. 73.44, but just lowers that parallel. If this pitchfork is in play, I don't know if it is. We don't have enough inflections just yet. But if it is, that's where you want the downside to resolve today. Okay. Like this is essentially your weekly open. So, you know, ideal scenario, we kind of hold right into the US Open here, but no more lower than that slope if this is going to work. So didn't get the stretch, kind of fizzled out quicker than I expected on Aussie, but I still want to see if this makes any kind of move here as far as at least trying to hold that major key support. Either way you slice it for Aussie, bottom line, if that support zone breaks, this thing could really fall apart real quick. And what is that? That would require some pretty severe dollar strength. And that's where the whole pause pullback scenario is sort of the focus here for Aussie. Does that make sense, guys? So Kiwi's in a similar scenario, although a little bit better in that the recovery actually gave us a little bit more of a cleaner rebound here. But here's the weekly open. It's been pitiful. Loved where we bottomed. Loved that we broke the opening range high for the week. I don't love that it failed right there. You know, that's basically Friday's high from last week. And here we are, almost unchanged, guys, on the week. Here's your weekly open. So some patience is required here. Definitely some discipline. You know, you don't want to get caught trying to chase these moves. It's just a chopped market. So still thinking possibility here that we get some more pullback. Again, weekly open ideal scenario would hold if Kiwi's still going to push. I was looking for at least a 618 extension. You know, that 2018 opens a major pivot in price. I mean, look how many highs and lows and inflections we've gotten along that level. Couldn't even make it there. Weekly open support at the 70 handle. If that breaks, you know, it still could drop into this parallel move up, but for me, I'm flat here. Again, I was trying to play the breakout of the weekly opening range. I wanted to go higher, took a break even stop, so I'm flat. Looking for another entry here on Kiwi. We'll see if we can't materialize it. RBNZ on tap next week. If anything, we'll get some play here. Let me take a step back real quick. I haven't showed you the weekly charts. Here's the weekly chart for Kiwi, the critical support zone that we've been talking about here, right? Aussie's been testing its critical support zone for 4 weeks. This one's been testing for over a month. What am I saying? Almost 2 months. June, July, August. All about 69.41 into 69.69. The 2019 highs, the late 2018 highs. The opening range low for the year. Just up. It's just been a grind into support from the weekly standpoint. So Kiwi on the daily doesn't inspire all that much more confidence. Here's the monthly opening range, still preserved. Here's the monthly open, right at the 618. That's kind of your key support, 69.60. And that's what this is. and that's what we rebounded. August open, 618, right into the open of the week. That was kind of the focus, but I'm getting discouraged that that fizzled there. So we have to allot some more sideways, kind of grind that possibility before we move off from here. Where's the last Kiwi update? It's right here. So no change to those levels. Questions on Kiwi? 1, 2, 3, and Kiwi is 4. All right, let's jump really quick sideways into, I want to go over last night's update on crude, because this one's also getting kind of a kickback here that's putting an interruption in what could be a larger recovery. So we've been talking about the crude trade, major support. We pummeled through it. Remember the pitchfork here. I've cleaned it up just for the sake of clarity. So if you go to the previous update, remember, anyone who's new to the room here, guys, quick reminder, if you don't see the daily and the weekly chart, it's always one click away. I alternate every update with just the near term, and then once I update this again, I'll include the daily, and there'll be every other update just for the sake of time. I mean, they don't change that often, and we need to update them daily. But here was the weekly crude oil chart back on the 10th. After we rammed from resistance, pulled right back into support. Here's what it looks like now. The daily chart had us still matching those lows from last month, and then a quick recovery. The 618 was just higher, and that's what this was here. The focus was near-term resistance targets the 50, and the 618 is sort of where you'd want to look for a larger reaction if there's going to be a larger build here. Here's what it looked like last night. The pullback stretched out a little bit lower back towards key support, so I adjusted the slope for you, and we highlighted this 50% retracement and the 618, which now converged on even more key targets from a technical standpoint. Here's oil on the daily chart. 38.2 retracement. There's the 618, the 50 is right there, just above where we turned. So what do you do with this? Still think it's constructive above the weekly open. I still think you risk the strike into 70.39, 70.74. Dollar weakness would help this, but in any event, the whole recovery play is still the same exact trade we've been talking about. This is such a major support zone. Maybe we don't get this per se, okay? But I do think that we're kind of basing. Anything beyond that 65, it's the 65.60 level that we've been really looking at. This right here, 2019 high, is more of the closed kind of concrete floor you want. But anything below that, and you're risking a full-on correction, 2 equal legs off the high would get you 62. Okay. Just find that a hard call to play. I didn't want to remove this slope, guys. I wanted just to show you this. Oops. Just wanted to show you this on the daily chart. You know, that's kind of messy. I want to see how to close the week. If this closes the week still in this region, we can kind of scratch this and just get as objective as we can. Try to measure the range from the monthly open, which is right here. Right? So you can get an objective sort of range for the month if you kind of clear out that slope, not make things messy. But I do want to see if this pivots and broke lower, if what was that, Tuesday's close above, and we closed again above yesterday, this could actually remain the inflection slope. And if that's the case, then again, you're looking for 70, 74 on the breakout. Slope resistance comes somewhere around there, 72 handle. Here's what the intraday chart looks like. Questions on crude? Could see a pullback here. I want to see 67.97 hold. That's the ideal scenario. That's the ideal scenario. It's the objective weekly open. Just below that, guys, at 67.50 is you have that 200. Is that the 200 or the 100? I think it's the 100-day moving average, which has been sort of capping the lows the last couple of days. So we'll see if that holds. Next up, quick segue on yields. So the 10-year yield has been holding resistance. yesterday, it looked like when I was writing that report for y'all that we were about to post an outside daily reversal candle off that low. We've since pulled back. We ended up closing just above, even higher. So the reversal signal, not quite as strong, not quite as profound. Resistance still 137.55, excuse me. And the breakout zone is just higher at that swing high that we made from last year, mid-July. You could probably ditch the July open at this point. So 2 resistance zones on the upside. Support, that doesn't change, 128.09. Bullish invalidation, you wouldn't want to wait for the lows. If we were to break below this month's open, that 618, it would be really detrimental for the broader sentiment trade. But all things held constant, the focus right now today is on these 2 levels as we close out the week. You need to close above 142.30 to mark breakout, and sort of the low is in for yields, the high is in for price. So keep an eye on this as sentiment continues to sway, ebb and flow. I mean, the SPX has just been on a slow march higher, guys, but the daily, the range, the daily ATR is just continuing to radically contract. Now, you can get long spurts like this, and we've seen that this year. Here's a perfect example in June. You had a long example of a spurt there in March and April, where it's just a slow, small range higher, but it gives way to these kinds of mean pullbacks, and everyone gets faked out in the resumptive trade. Obviously, that one in May was a little different of a scenario, but I just can't get too comfortable in chasing this. Here's what it looks like on the intraday. Even near-term slope price action. Let me get this to 4-hour. Like, what do you do with that? What do you do with that? That retracement, just take it to the high here just for giggles. But you can see, not the most encouraging market. 2019 low looks some pivot, J. And what asset are you talking about there? For SPX? Was it a different asset? I'm sorry that. I think I saw that question late. So yeah, SPX, it was the 10-year. You were talking about the 10-year. Not a bad eye. Yeah, I actually like that. Jay. So Jay's talking about that swing low right there, which is actually very complementary to the mid swing high there, 143.22. $142.30. Yep, really nice confluence zone. Not bad. A lot of times, Jay, on these longer term downside stretches, I do like to use the low week close or the low day close, which kind of brings this up a little bit. Interestingly enough, keep an eye on that. A lot of times the intra-week or intraday spike will tap those levels, and that's where you'll get the bigger response. But interesting confluence region there. I like it. All right, next up, let's jump back into the FX block here. I just want to cover Bitcoin, dollar CAD, and dollar yen. So real quick, from the latest updates, here was our move on Bitcoin. So by the way, I hope you guys enjoyed. I added that piece from Business Insider there, so you can get a free look if you're not a subscriber. But we're basically there right now. The whole premise of that article, that interview, was 45,000 going to hold resistance? We broke the 2 levels that we were looking for, pushed into uptrend resistance, and the focus is the parallel from 2018 I've been showing you guys going to hold? In time, that still allots us maybe a day or two, or basically a day or two, or even more. Again, these aren't point for point, but you get the point, is that you still have a lot in a couple days before you have to turn over, or this would completely give way. The breakout would just can look for continuation past 51,000. So here's what Bitcoin looks like now. We're back below 45,000. We did really try to struggle to break up there on building divergence, daily divergence. Here's the initial pullback. Nothing is solidified in the reversal pattern yet. I'd be looking basically for support just below 43,000. If you get below 4280, it's encouraging to get below that median line, but it's really this zone here you need to break below again. That's sort of the signal that maybe the 2018 parallel is in fact going to kind of guide the way here. And it's counterintuitive because the Bitcoin trade just keeps, it's just the sentiment is just running rampant, right? So I think it's very possible you could still wash out. And that was, what I told that reporter from Business Insider. I think this is the make or break moment. Even from all different types of perspectives, the advance is kind of exhausting here. If the pullback holds 42,000, we're off to the races. I think it's right back on the resumptive path. But this is the sort of exhaustion pullback we were looking for. Keep an eye on this. Top side levels on the intraday, like really near term, 47,000, 480, right? You can envision a scenario, some stupid thing happens today where the dollar drops off real quick, you get one last spike and a move over. But the broader idea is for the exhaustion trade near term in Bitcoin. I see it not log scaled, tagged 50% exactly. So if you take the log off, which you possibly can do at this point, you know what? I don't have that low in. Jay, you're catching all kinds of errors on here on my side here. Nice. Yeah, that puts the 50 right there. I tend to work with the log. I guess the whole point of using the log scale on this is that the move, the original thrust, right, from like the thousands into the 10,000s was so monumental that it really tends to skew things. So I've been sticking with the log scale just because the range is kind of big. If you take it off log, it makes a different picture, right? If you take it off log, we're actually still in the downtrend. And this is big resistance. I give myself the allowance of sticking with the log to say, well, look, let's just take a more objective picture, percentage-based price move. But in any event, the exhaustion trade is what we're looking for. And hopefully the exhaustion trade is what we get. So nice beat here on Bitcoin. It's do or die. It's do or die. Dollar CAD. This is, lost my count, number 7. So Looney, another one that has been very interesting to start the week. I told you guys the trade setup I was in on this one. Caught that short last week, was really nice. The rest of it got stopped on the break open. Again into the open of this week, was looking, this was this week, was looking for the drop into 24.85, which is the 618. We still haven't gotten the clip. So steady as she goes. The biggest mover for the week is still Swissy, which was a directional move. This did give a nice break of the weekly opening range, but just really slow momentum. So look, weekly open, nothing changes. Bottom line, weekly open resistance 25.45. Still looking for the drop towards 24.85 if you can get it. Just to complete a 618. Here's the last update on dollar CAD. I've scratched this near-term slope because we've kind of broken the lows already. So levels are unchanged. There's your 50, there's your 618. But I'm basically looking to see still if we can't get that drive back towards key support. For dollar weakness, this is the one I still favor just because of where we are in trend. Here's what dollar CAD looks like on the weekly charts. Quick reminder, big resistance. Questions on Looney? Weekly open resistance at 25.45. I want to see that hold if this is going to work. Swissy. Here's Swissy. So worst performer versus the dollar today, this week. Just a ripper. It's been sort of a sleeper sell. I think this has been falling under the radar for a lot of FX traders who are just looking at it today and looking at, whoa, we're like 4% off the lows or something. It's pretty big. Big rebound. Okay, I don't like where it turned from, but whatever. Here it is. As we turned from the start of the week, we noted that this thing looks pretty darn interesting. It looked like it had broken downtrend resistance. The 618 was given out. 92.64 was basically up here near the upper parallels and the July open. So we're making a stretch towards there, but we haven't made it there quite yet. Here's what it looked like earlier in the week. It did break through that 618, but again, no man's land. It's really just losing steam. Okay, here's what it looks like on the daily chart now. Here's what it looks like on the daily chart. I guess, so this is a month back, so forget that. Here's the intraday chart. So the only new thing I've added here, well, actually, it's the same exact levels. Nothing's new. The pitchfork is right there. 1, 2, 3. There's the 75% parallel we broke, came back, tested as support, continued on. You know, it's just losing steam ahead of that last target. So the July open is 92.49. The 618 is 92.60. That's key resistance. Last month's high was also right in that zone. So the whole stretch, beautiful as it was, is now coming into a region of kind of hairy. So if you're still holding longs here, clean it up a little bit. 92.60 into 92.70 is where the trouble starts. It's been a 6-day stretch. 1, 2, 3, 4, 5, 6. This is going to be the 7th. If we take a quick just look, comparatively speaking, when's the last time that we got consecutive advance of that magnitude? Was back here. This was the last time that we had a 7-day advance. That saw pretty big washout before resumption. Prior to that, was back in 2018. And again, that was a little bit of a fake out. That one gave you another couple of days up and some sideways days before a pullback, but it was really pitiful. So look, the point is it's extreme in that we've had a pretty long, steady stretch. It's broken downtrend resistance. It's broken all kinds of slope, but the advance just looks too tired. And while I do like this higher, I think that the immediate advance, again, is just a little bit of an exhaustion trade here. So I'm kind of easing off on this one. The pullback, 91.76, definitely 91.36 needs to hold. That's the weekly open. That's your bullish inval. For me, it's all about what kind of reaction we get here. So if you're not holding anything on the long side, there's nothing to do here. If you're holding things on the long side, clean it up as you stretch towards 92.50. If you're looking for new exposure, new opportunities, this might actually be a decent exhaustion point, a decent choke point for a pullback. Now, if that does materialize, take the retracement off the low and see where it converges on slope. Actually, let's do some housekeeping here. We can drop both of those just to clean this up. And again, wherever the high materializes, something like that puts basic support at the 38 too. Again, I don't know that this is a high. This might stretch into the region, which would push the retracement up, but you get the picture of how you'd play the pullback here if it does buckle. But interesting moves for sure here on dollar Swiss. Again, one of the only pairs has been a little bit more one directional this week. Aussie gave back so much. Kiwi gave back so much. Hell, Euro gave back so much. Swissy, still on the stretch. Still in the stretch. Okay, last but not least from the FX block, here is dollar yen. A quick look at what that thing's doing. So we made a big reversal candle yesterday. Again, classic dollar yen, false break of support. Looks like a false break of key Fibonacci resistance. Broke right through. It did close yesterday. I was telling you this in the webinar. See if it closes below. It did. So I'm inclined to think exhaustion here as well, possibly a little bit of a pullback into support. If we take a retracement of the most recent stretch, something like this, it puts the 50, I don't know why that's still there, excuse me, just above the 2019 open, just above the monthly open, just above slope, just above the 100-day moving average, all converging in this spot. I don't think you get that low, but that's bullish inval. Okay, that's bullish inval. We're under the assumption that a more significant low is registered here. If that is true, that's really the max loss you should see on any pullbacks in dollar yen. On the long side, the levels haven't changed. The key levels are still 111 and 111.60. 111 being the high day close for the year. There's a big, massive high day reversal close. And 111.60 being the high day reversal close from back here in 2020, back in February. So two key levels on the upside if this breaks, but I'm thinking from here, the risk is for a little bit more of a pullback before you start resumption. So let me clean this up for you too. There you go. Feel free to take a quick snapshot if you need it. Okay, into the com block we run. Silver and gold. I haven't touched these all week. The trade was either the rebound off support of the tweet I gave you guys on Sunday as this thing drove into it. There's nothing for me to do here in the chop fest. This is going to contract. I wouldn't be surprised if we get right back into 1720 again and we continue to sort of grind. But on these massive explosive moves, you need to let the dust settle. And I know you guys hate to hear that, and I'm not a big fan. I wouldn't want to hear me say that either, but I do think this is where most retail gets chopped. Okay, very big drop. It was remarkable where we bottomed. Okay, we can ditch this slope now. I wanted to use this for example purposes. I told you guys on the Monday webinar how it played out, the break, how it shifted our focus lower, the new slope that is in play. We'll scratch this one for now. Okay, and here's the new setup for gold. So where we turned from on Friday, on Sunday, on the Sunday open was insane. So clean, it was freaky. 1670, 1682, that's the yearly opening range lows, a host of Fibonacci regions, and down slope support. Here's the rebound. If we close this week above 1755, guys, to me, that's screaming a lows in. Just my humble opinion. Okay, you have a clear-cut pivot in price here ever since that high you made into the March swing. You broke through it, you tested it as support twice again, and the break fueled the massive drop off. If we close the week above this, I would think a more important low is in. Okay, if we don't, that's where you get that possibility of just like sideways, you know, chop, chop, chop. So I want to sit this one out. I want to let the dust settle. I think it's a very, very important trade that we're going to be looking at over the next few months, guys. This whole inflation thing is just starting. So let's jump into silver. Very similar scenario. Not quite in the fact that the level was like so critical as it was here in gold, but here's what silver looked like on the weekly charts, right? You're looking at basic slope support off of that swing low from September. Now it's only a 2-point touch, so I don't put too much merit there. However, it is also the November close low. And you see the strike there with a larger recovery. Gold gave us the larger recovery off that support than silver is. So once again, you're seeing the possibility of what could be a non-confirmation high in related assets. Again, something that often happens at market turns, but that remains to be seen. So for both of these trades, guys, just do yourself a favor. If you're not in any positioning, sit tight. I think you're going to see some more back and forth on this before you finally start to clear the way. Again, here's the daily chart I've been following for silver. even if you get a rally back towards 24.40, that's the low day close, the previous yearly low day close, this year's previous low day close from back in March, and that converges on slope near 24.40. So whereas you have the level in gold, I think here you have a level in silver too. That kind of is where you want to cap out any rallies if the move is lower. With the same respect, bullish inval, or bearish, excuse me, inval is right around 25, 24.93 into 24.80. All right. And guys, that's everything I have on my list. Let me know if you guys have any questions or trade setups you want to review. If you've had a frustrating week because the markets have been, I mean, again, if we take a look at VIX, it's not encouraging. The longer these periods of low volatility last, the bigger the charge, the bigger the breakout. So I'd encourage you guys to keep the faith, stay upbeat. Things will turn, and we will start to get some more major moves, I think, as we get deeper into the month. But certainly this drawdown in the euro, this max out in the dollar, just use caution here because they are looking a little exhausted. So we'll look to the close of the week. Like I said, there's not much on the data front, but heading to next week, hopefully some of that euro data, the RBNZ, retail sales from the US, these things will start to stoke these dollar majors a little bit more play as we get deeper into the month. All right, so if there's no more questions there, I'll let you guys go. Thanks again. I will see you all on Monday for the free session on Daily FX, then right back here on Tuesday and Thursday. Have an awesome weekend. Jay, Steve, Ted, Kay, have an awesome weekend. Best of luck trading, and I'll see you on Monday. Cheers.